So my name is Damien. I'm not sure if I know everybody in the room, but I've been hosting panels for the past 2 years, and it's the third year now, on tokenization. So I'm going to start with the same tagline like last year, is that the financial world is entering a new era. And I know, I've said that 2 years in a row, but I think we're finally getting there, and I'll probably say that next year as well. Considering that the amount of assets we have now on chain amounts for roughly 320 billion as of yesterday. It's been long confined to only stable coins, which is still representing the largest part of it. I think it amounts for roughly 290 billion now. But we're seeing a tremendous growth, which feels really unstoppable right now, in terms of real-world asset moving on chain. So right now we have more than 30 billion, and it's grown almost like twofolds in the past year. So today, I just want to celebrate that and be able to tell more about where we stand, where we're going, and how is the overall adoption growing. And for that, I would like to welcome 3 panelists. Paul-Adrien from Spyco, right here, which is one of our portfolio company. Michael from Cashlink. And Hendrik from Metzler Bank. Guys, welcome.
Hey, Hendrik, nice to meet you.
It's a pleasure to have you here. And before we start diving into this wonderful topic of the tokenization, maybe we can do a small round of intro and we can explain what you do at your companies, what's your role, and we'll dive right into it afterwards. Hendrik, do you want to start?
Yeah, sure. Well, thanks for having me. And my name is Hendrik. I've been with Metzler since 2007. Started out running the equity strategy, then set up a quant team in our capital markets division. But personally, I fell into the crypto rabbit hole in 2016, never gotten out of it. And then I was able and happy to push that topic forward to our board. And they have established a digital assets office right underneath the board in 2020. And last year, they came to us to combine it with all the AI and process innovation topics, and now we have a team of around 10 people focusing on all of these kind of topics.
Great, Michael.
Yeah, Michael Duttlinger, CEO and co-founder of Cashlink. We are the German market-leading tokenization provider. We are fully regulated as a so-called crypto securities registrar and crypto custodian. So we've become, from a tech startup, we've become a financial institution now. We have processed the most tokenizations in Germany so far. And we have done the first fund together with Bankhaus Metzler. We've done the first, I think, solar park, wind park, real estate. And our clients are now mainly financial institutions, for example, like KfW or Deutsche Bank and other financial institutions here in Germany. We're based in Frankfurt. Yeah, and happy to dive into tokenization today.
And I'm Paul-Adrien, co-founder and CEO of Spyco. We tokenize cash management instruments, started with money market funds. We launched a year ago the first UCITS compliant MMF, ever approved in the EU with a shareholder register on chain. And now we are moving into other asset classes as we grow, looking at cash and carry, direct lending, etc.
Awesome. To kick things off, I have one question, which is on the state of tokenization today, which is what, in your opinion, has truly changed that is signaling tokenization to become really from kind of a POC or pilot talk stage towards more like a capital market infrastructure that we're seeing now being more and more integrated into, at the same time, TradFi and DeFi. What's your feeling about that? What has signaled that transition? Hendrik, you want to start?
Just basically take a look at all the names that are in the room here now. The big institutions, they're not just talking about it, they are putting real money and capital into it. And especially when you do take a look at the US, for example, and all the names back there, there's a huge change when you listen to, for example, Larry Fink speaking like 1.5 years ago and listening to him now saying that he thinks everything will be tokenized in the future because this new market infrastructure is faster, cheaper, better, more efficient, and gives you more use cases to build on. I think this is a clear sign that now you can really take the punchline and put some facts behind it.
Yeah. Early believers here at Blockwall.
Yeah.
It's always regulation. So in Germany, we were probably one of the first countries to regulate tokenized assets, and this gave this was basically the door opener for all the big financial institutions to dive in, because back then it was still some gray market. We see the same in the US now. So 2 years ago, basically in the US was not much happening due to regulation, same in the UK. And now with the new administration in the US and the new crypto or digital asset laws, it's a completely different momentum, driven by the clarity of the rules, clarity of the laws, which then gives investment security for the big corporates. And so, yeah, I think there's a really big momentum in the US market now. There has been a momentum in the German and European market so far, and now we'll see a little bit of race. And also the race is good, because now we see the competition between between the US and the European Union, and this will also speeds things up in a positive way.
We'll come back on that later on. I think the difference between the US and Europe is something which is definitely going to impact how tokenization hits the market in those two geographies.
No, not much to add, but I think regulation of stablecoin as electronic money is a big thing, with MiCA, now Genius in the US, and effectively the approval also of issuers as e-money institutions, for instance. Approval also of securities natively issued on chain. With our money market funds, we are an example of that. And I would say exactly like you said, basically the fact that the main institutions are now clearly looking at the market at the very minimum, and in the best cases already operating on the market with products live on chain.
I really want to ask you a question, Hendrik, because Metzler is one of the oldest banks in the world, I think, right?
At least in Germany, definitely.
Yeah, but I think it's in the world also, probably. I wanted really to zoom in a little bit on how did you really convince your board to look into that early on? Because, I mean, we had a chat before that panel where you told me that as early as 2020, you were already, knocking doors internally. How did you convince them that this wasn't just a trend or a fad, which was going to even fade away, but really put it on the agenda as a strategic topic for the firm?
Yeah, well, you can imagine it doesn't happen overnight. It's a journey for all of us still, and also when you try to convince the board about this new technology. What we did basically, and the punchline for us was that this blockchain technology in general is kind of like a new technological paradigm shift. Because it's a new evolutionary step of the internet. Now we have a new layer on top of the internet stack where you can transfer value and trust in a native internet way without having intermediaries in between. They've realized that. We always use the example of the Bitcoin network. I mean, probably everyone in here knows that Bitcoin is one spelled with a capital B and one's with a small b, but there's a clear distinction between that. When you spell it with a capital B, you're talking about the network, but in order to interact with the network, in order to build something on it, you need to pay the network in the native currency, which is the small b that you can basically buy every day. So this was kind of where the light bulbs internally went on, because they also know that they have to take a look at this new market infrastructure if they want to expand their products and services into the future and serve a new client base, a younger client base. And once they have understood that, they set up the digital assets office. They declared it as a strategic topic for the bank. And then we were able to lay out all the puzzle pieces that in our view were necessary in order to form such a digital asset ecosystem. And then we had the chance to engage in different strategic projects. Michael already talked about it. We were the first bank who tokenized the fund share here in Germany. We were also engaged with KfW when they tokenized their first bond. We interacted with stablecoins, digital euro projects. We even mined Bitcoin with the Deutsche Telekom out of renewable energy. So it was kind of like a whole range in order to move away from fancy PowerPoint presentations to real projects, because you also need to create this flywheel effect internally with all the different desks. We did that, and now we are lucky that we have all the different learning effects, and we can see the puzzle pieces coming together now, and we can slowly start to monetize on the learnings, and we're trying to basically build a trusted bridge between this old world and this new world.
And maybe just one quick addition on that question. for you in the long run, is it about like savings? Is it about operational efficiency, or just like product demand? Like, where do you see, that moving in terms of value proposition for you having tokenized, assets?
Everything, basically.
Okay.
I mean, it starts with efficiency. That's kind of like the obvious use case, but you also need the puzzle pieces moving together. Otherwise, you don't have any efficiencies. It doesn't make any sense to have tokenized products but not tokenized cash.
Yeah.
So they have to be there. Then you need to have tokenized secondary marketplaces and so on and so on. So there comes the efficiency, but I think the product side is much more interesting after that because there are different new yield generation methods, product offerings, service offerings that you can imagine.
I'm jumping to you, Michael, because you've partnered with Mesler on one of the tokenized fund shares. And my question here is very simple. It's like, what demand have really like moved tokenization into production at your clients, right? Because you always go through, phases of pilot or POCs, and now it's becoming real. Like, what has moved that? Like, what happened during those POCs that really made them realize, okay, now we can go into full productions?
Yeah, I think it's totally different. So when we started, we started with real-world assets, solar parks, wind parks, and so on. And for them, it was really like easier transferability. It was about making illiquid assets more liquid, and it was more about making the securitization process easier. And so I think we have served more than 30,000 retail investors in Germany, and I would say 25,000 didn't even know they were buying a tokenized product. Yeah. So it was really technology in the back end, but it's what is a clear advantage for the real estate developers, for solar park and wind park developers, to directly distribute their assets. So, but this is still a closed market. So then, when moving to financial institutions, it's a completely different value proposition. It's also shifting from this narrative which we had in tokenization of illiquid assets and more interoperability to really more efficiency. Now it's about new capital market infrastructure, what is going to be built, and we see this in the US when they talk about tokenization of Wall Street. Now here, tokenization of the whole capital markets ecosystem, and we will see that the old ecosystem, which I sometimes refer to as the old telephone, and we have now a mobile phone. So it's a mobile phone, maybe Nokia moment, that the mobile phone has developed in totally different things, what we do with the mobile phone. But at the beginning, I could just make a phone call with the old one and with the new one. And we'll see this with capital markets the same. The traditional capital markets structure, they're moving maybe from T+2 to T+1. Yeah, so there's still developments happening, but the real radical innovation is happening in the new capital markets infrastructure. And then I think the financial institutions are realizing at some point I will be part of the new ecosystem. It's now a question of, do I want to be it now and I want to be one of the shapers of it, or do I want to be one of the last followers? And of course, we will see everything, but our clients then really figured out, okay, there's maybe short-term efficiency, point A, and point B, in the long run, it's a new capital market ecosystem where I want to be part of. And maybe adding here on the short-term efficiency, it's completely different on the value chain. So some clients save a lot in with first issuance. Some clients save nothing with the first issuance. There it's more like when they scale it, they might save something. So we have to look at each case individually. Where do we have efficiencies through tokenization, and where do we have potential efficiencies in the future?
Got it. Paul-Adrien, you're serving a bit more than 1,000 clients now on the B2B side. Can you tell us more about like the approach to marketing tokenized cash, which is essentially what MMFs are? And did you really use that blockchain argument? Is it something that is completely invisible to your clients? How did you market that?
Yeah, I mean, I think we benefited from a good macro environment, basically with the rise of short-term rates. And we noticed that there was basically an issue in Europe in terms of access to money market funds. If you look at the money market fund as an asset class in the US, it's $7 trillion. It's widely available, distributed to retail, startups, SMEs. Now compare it to the very same asset class in Euro at the scale of the EU it's 10x smaller. That's the order of magnitude that you need to have in mind. And the reason why it's smaller is because it's mostly distributed to institutions and large corporates. And so there is a market opportunity. There is a very clear product gap in Europe around money market funds, as long as rates stay relatively high, short-term rates. And that's exactly why we started in this asset class specifically. And now, when it comes to tokenization, for us, it's mostly, for now, about offering a better UX, a better product experience to our customers who are really into the business of subscribing, redeeming money market fund shares for very basic use cases. They want daily access to liquidity. They want daily interest on their cash. And that's pretty much it at the moment. Now, there are a lot of other interesting things we are working on, but it's first and foremost about the product experience, I would say.
Did you have like major frictions when building that product? I know the story, of course, but I think it was pretty interesting, like the progression towards like what is already like a product like everyone can subscribe to.
Initially it was sort of all about, we had to build a product, a transfer agent stack, a distribution stack, so a UI, an API, etc. But that's mostly a tech product issue. Then it was all about getting the regulatory approval to launch these new money market funds, essentially. And for us, as a small firm without any track record, it was obviously hard. So that was the key thing we had to unlock initially, and we managed to launch a bit more than a year ago. So I would say that was the main issue. That said, we were pretty confident that issuing a security on-chain natively was possible under French law that we used. It's also possible in Germany, from what I understand. I'm not an expert, but it looks quite similar to what exists in France. It's similar also in Luxembourg. And it also, there is a question about harmonization, right, of all these different national law. It's still quite bizarre to see that securities law has not been harmonized at EU level. And so that's clearly a pain point, I think, when it comes to scaling at the EU level. But at least for us, being on the French market, initially knowing the French blockchain law very well, we were confident that we could get there. It was just about convincing the regulator that we were serious.
Yeah, and it's like one of the main difference also between the US and Europe in scaling blockchain solutions in a regulatory framework, which is fundamentally different. We had a good chat with Hendrik regarding that, and I think you mentioned something that I really wanted to mention today, which is that Germany and Europe were initially quite early leaders in terms of regulatory clarity, yet we're seeing the US accelerating past us already on stablecoin, tokenization, and programmable markets as a whole. Like, what do you think we're falling behind? Like, what's your take on that?
Yeah, like you said, I think we had a head start. We did a very good job here in Germany and in Europe with regard to regulation and also the institutional adoption. But in order to capture the digital asset ecosystem, it's not just to have a nice regulation, you also have to have institutional adoption, and you also need to accept these open source networks. And when you take a look at the US, I think with all of the acts that they are kind of like proposing right now, Genius, which is already passed, then the Clarity Act, then the No CBDC Act, and also the Strategic Bitcoin Reserve, by kind of like establishing, from my point of view, a new neutral reserve asset, is pretty big what they're doing right now. That doesn't happen every year. It's basically, when you take a look at history, that happens like every 50 to 60 years, but now we're at the point, again, with all the drama that is going on in the world, where we have too much debt, and we have to find it kind of like a new system. And I think this is kind of like the framework for the US to put the US dollar-centric system into this new digital world. And I think they're doing a pretty good job right now. And this is kind of like where I think we are falling behind from the momentum, because we're not doing at the right scale, even though we had a head start. And I also don't think that we really grasp the full picture of what the US is setting out right now.
Yeah, what's your take on that, Michael? You're literally like on the battlefront here. Have you seen regulation really, like keeping you down here, or because right now we've seen in Europe, Genius Act first in the US, then DLT pilot regime now in Europe, which is already like progress of some sort. What's your feeling about the whole regulation topic?
Yeah, I mean, first of all, like Hendrik said, I think we did a pretty good job, especially in Germany, for regulating so fast and so early. So this was really a key moment for us and for the cash-link story and for the whole development in the market. I think same on EU level, the DLT pilot regime in MiCA, we also have at least trying to harmonize. There's still a lot of gaps. I totally agree with you. There's still gaps independently of the whole blockchain ecosystem in the traditional laws. Where the EU has to do a lot of stuff to do. So we had a good head start, like you said, and now the US is entering the race, but with like complete different speed, completely different power. But I think this is also a mentality thing, like it always has been. When the US is approaching such a topic, they approach it a different way as we in Europe approach it. We see this here perfectly. And they, of course, have a second mover advantage. So what I heard also, that the members of the Congress in the US are now actively talking to also the financial institutions here in Germany, to the politicians here in Germany, to really get all the pros and cons of our regulation, to then have the second mover advantage and take the good stuff from us and develop it even further. But for us in general, I think it's still it's a very good situation. So we now have this competition, which I think is just beneficial for everyone, because competition just pushes everyone to move faster. So I think this is good for the European market as well. And for the institutions, it's good, because also for the German institutions and the European ones. Now the US and also sometimes the mother companies in the US are now actively approaching topics which they haven't done before. So it also gives some more resources to the subsidiaries in Europe of the banks to do something. So I think it's an acceleration for everyone. Of course, you can always argue what hasn't been done in Europe and what needs to be done. And I mean, when we are in our small groups, we talk about the specifics of this law has to change in this direction, and here we have to do this. And there are still things where sometimes like shaking my head, where we have double regulation and stuff. But at the end, I think...
Such as, for example?
For example, you have the MiCA regulation, where you're regulating stablecoins, and then you have the PSD2 directive, for example, which is a traditional directive for payments, and they have an overlap, where even the regulator says, the overlap doesn't make any sense, but due to the current regulations, we have to apply it and enforce it, but nobody wants it, and this is something where the politicians then have to react at some point to clear this out. But I think it's normal. I mean, you have a completely new technology, new regulations. You can't find the perfect solution right away by just sitting down. You have to do trial and error. For me, it's a more startup approach. The regulator and politics have to do now a trial and error approach, and then actively do it. I just hope it doesn't stop, which always can happen in politics if you have other topics that are more dominant then.
Yeah, makes sense. Paul-Adrien, since you regulated yourself, could you maybe explain a bit more what is the infrastructure of SPICO looking like to comply at European level at the moment?
So just to set the scene a little bit, we have two types of regulation. We are regulated as a distributor of financial instruments, a broker, and our products also have a specific license, which in our case, for our first product, is a UCITS money market fund license. Now, the shareholder register of the funds is on-chain. What this means exactly is that when we create fund shares and when we destroy fund shares, according to subscriptions, redemptions on a daily basis, because it's a money market fund, we have to issue tokens from a technical standpoint. These tokens abide by the standards that you find in the crypto industry, just like a stablecoin, with one specificity, which is that you need sort of what we call this a permission manager to check that the destination address, if you want to transfer the token, is approved by the issuer. This is not the way stablecoins, or most stablecoins at least currently work, because they are bearer assets, while when you issue securities, they are registered assets. So you cannot transfer the fund shares to anyone. And in most jurisdictions in the world, it's illegal, at least for funds, for shares, to have anonymous holders as an issuer. So that's the reason why technically we need this permission manager that works together with the standard, in our case, ERC20 contract, for those that might be familiar. So that's mostly it, actually. So think of it, when you issue a fund, you can have the shareholder register on a piece of paper, on an Excel spreadsheet, on an SQL database. We just use Ethereum and similar technologies to do that instead of a server, basically. Yeah. And to the previous points on regulation, I think it's quite straightforward, right? What we need is just a law that is tech agnostic, that says that you can issue money or securities in whatever database, and that's pretty much it. You know, what's needed for the industry to take off. And at the end of the day, the best database will win. Maybe it's not Ethereum, maybe it's not a blockchain, but you know, we need we need the market to be open and competition to take place, and for the best technology to win. It's just what we need. And if you look at French law specifically, what the blockchain law that we used to launch our product clarified is that the French, it's called monetary code, so securities law basically is tech agnostic, that it's okay actually to issue a security on a blockchain. But it should be quite trivial, right? But anyway.
Yeah, definitely. I mean, anyway, like MMF is probably like the very basics of, like on-chain finance at the moment. We're seeing a push into equities also at the moment, or private credit. It's still, I think, less mature than MMF will ever be, because it's also more risky and you have a bit more of risk management to be done on those products. But we're seeing, for example, Robinhood tokenizing equity. We're seeing some of our portfolio companies are tokenizing private credit and stuff like that. From a bank perspective, like how far are we from being able to bring also those products now to clients? Because I understand this probably involves a bit more of complexity, both compliance and of course infrastructure.
Yep. Well, of course, it's still a journey, like I've said in the beginning, to reach the future of capital markets. But I think the puzzle pieces are moving together now from all kinds of ways. And I think, you mentioned the big fintech companies, Robinhood building their layer 2s, tokenizing SPV structures right now, but you can also see Galaxy, for example, has a tokenized real stock on Solana with Superstate. These are basically the facts that are kind of like showing you the future. And the biggest part for me is actually kind of like the UX, to make it a little bit more seamlessly to trade between these two worlds and also to achieve see the benefits of the new world. And when you do take a look at kind of like, I brought with me the new Solana Seeker phone. This is kind of like a normal telephone. It has a seed vault here, and I can already trade my stocks on a Sunday if I want to. It's an SPV structure, but all of the other stuff is coming too. I can put this tokenized stock into liquidity pools on the DeFi side. I have a dApp store here, so also the UX side is getting kind of like there, and this is basically pushing this momentum even further up.
Yeah. Michael, what are the assets next in line at CashLink?
Yeah, so for us, it's actually the leverage structured products.
Okay.
So what we are seeing, because if you look at the structured product landscape right now, it's very expensive in the traditional rails. So I think they have a naturally high incentive to move to a new capital market infrastructure with more efficiencies, also in the short term. So for them, it's really like for some you are seeing it in your P&L in your first year. And I think this is why we see this as a big asset class, and also fixed income products are more steadily going up. Yeah. And we see increasingly more volume on fixed income bonds. I think over the next 12 months. So these are more the bets from the CashLink side. We've done a lot of also private credit and equities, but for real, if you really look at where's the TVL going to be, it's money market funds right now, and I think then it will be high volume bonds and tons of leverage products.
Yeah, it makes sense. And once those products start to exist on chain, you also have to benchmark them against DeFi alternatives, right? Especially when you touch yield, right? DeFi has an history of, pretty high yield when you think about it. So when for sure, when you compare it with, money market funds or, standard credit products, aren't you afraid that at some point people will be like, hey, DeFi is a better alternative to traditional product that the TradFi is proposing now, tokenized?
I mean, it has to merge at some point.
Yeah.
And for me, I mean, also being in crypto since 2016, for me, the crypto ecosystem has always been some oracle or some view in the future, how it will look like. And I think it's like the biggest lab we've ever seen in the financial world, with real money, real users. So that's actually what all the researchers dream of, kind of, yeah. And we've seen all the fraud because we had no security laws, so we saw all kinds of frauds possible again. So it was also a good sign why we need securities laws and consumer protection. And now what's going to happen is that each of these technical innovation we've seen in the DeFi ecosystem, from yield staking, lending, automatic reinvesting, and so on, we will see this becoming regulated, I would say step by step, or kind of integrated in the regulated world. And this is, of course, like you said, you need things like AML, KYC, and DeFi sometimes is completely wild, wild west, where you don't know the counterparts, and so on. And then you have to see, like, okay, how are we regulating securities right now? What is the technical innovation? How can we marry them? And then I think we will open up more DeFi use cases in a regulated environment, but it's going to be step by step.
Yeah.
And also maybe to this point, if you think about DeFi yield today, it's like mostly over-collateralized lending, basically. So it's a very, in the grand scheme of things, a very specific source of yield. Yeah, so we will, it's interesting for sure, but the lending space is super vast. So when it comes to bringing on-chain instruments and credit, there is a lot of things to be done beyond just over-collateralized lending, which has developed in crypto.
Yeah, I'm fully agree with you. If you want to add something?
Yeah, I just want to say that I think we are kind of like now entering the first stages of the permission DeFi era, where you basically see all of the tokenized products and how the big institutions are kind of like playing around with them, putting them in the background to liquidity pools, or now JP Morgan is accepting Bitcoin as collateral all of a sudden. So all of this kind of stuff is kind of like the first stage of this permission DeFi area, where you still face the big institution as your counterparty, but they're doing the other stuff, the high sophisticated stuff in the background to offer you a better service, higher yield, or whatsoever.
Yeah, and that's a perfect opener to my kind of last step of this panel, which is in the 3 to 5 years, what we will be saying on this panel specifically, right? What is your take? Maybe Hendrik, you can start on so asset classes we've discussed, but more like what are the very much next step for retail, but for businesses as well? What do you think?
Well, I think when you do take a look out into the future, I think in 5 years everyone will probably have a wallet, if they know it or not, but they will have a wallet in the background. I think this will be kind of like a thing that is coming. Especially with the devices and all the other UX that is kind of like being built now. And looking even further ahead, the combination of kind of like AI, machine-to-machine payments, or even exchanging trust and value between machines and crypto, this is also, I think, an area which will offer a completely big explosion of innovation with regard to efficiency and completely new products and services.
Yeah. Michael, what's your take?
Yeah, I totally agree on the 2 points mentioned here. Everyone will have a wallet, and I think the combination of AI and tokenized or crypto and tokenized products will be huge, because now we have all the AI agents and people know ChatGPT, and but at some point you will have AI agents that have a treasury, and they can do with the treasury what they want as an AI agent. And then we again have all the critical topics about regulation. Can you sue an AI agent? Yeah, what is if he doesn't comply to AML laws, the AI agent, and so on. So there will be so much topics for the regulator and the politics to solve then. What about prospectus laws if the AI decides to do a public offering and the AI agent just does it? And nobody can stop the AI agent maybe because we've set them free. So I think there's so many things happening in the marriage of AI and the DLT capital markets world. And then, we will just see a shift from the traditional system to the new system more and more. So it will decrease on the traditional side, it will increase on the capital 2.0 side on blockchain. I will see way more products there. And when my friends sometimes ask me, who are not even crypto, so yeah, what is this all about? I tell them, just imagine that's going to be the first step, is imagine you can send any asset you have as easy as you can send money via PayPal. So I can easily send you €5, but I can send you 5 shares of Tesla stock. I cannot send you, click on send and send you part of my house. I cannot send you part of my loan. And so on. And so imagine it's going to be, I can handle it as easy as I can handle money with every asset. And then if you think it through, it's going to be very, very interesting.
Yeah, I mean, I fully agree with what has been said. I think everything hopefully is moving to cryptographic wallet. And this includes securities in addition to crypto assets. But I'd like to stress just how far we still are from this sort of state of the world.
Yep.
If you take like the money market funds industry, for instance, there's like 7 trillion just in the US in US dollars in US domiciled MMF. If you take the whole tokenized money market funds industry worldwide, there's probably 5 billion dollars in these instruments. So just to highlight the discrepancy, and also if you think about everything on chain, so payments happening on chain with stablecoins, subscription, redemption of securities happening with stablecoins, we are not there yet, right? Today, if you want to buy a money market fund share with USDC, for instance, one of the main stablecoin, you have to go most of the time to an off-ramper, which will convert your USDC into USD, most likely via Circle, then send a wire transfer to a fund bank account, which is in traditional form. So we are not there yet, but a lot will happen, I think, in the coming years, and gradually we will get there, I think.
Yeah, it's a good sense of scale. I mean, I forgot to say during my intro, but of course, we have 320 billion of assets on chain now. 290 of that is stable coins. So you can see that there's like a huge gap between the programmable money and assets on chain. Out of what, 500 trillion globally of assets that could be on chain tomorrow. So even by the prediction of, I think the BCG did a very good research on that, said like we assume 16 trillion could be on chain by 2030. It's still, like a grain of salt in the ocean, sort of. But I think just to probably end this conversation, what you said on being able to freely transfer assets or ownership of assets in the span of 2 clicks is probably the end game. And for that, we'll need to have like a lot of different infrastructures in place at institutional level, as well as also probably having a new generation of people that know how to deal with these instruments. Do you think, by the way, which is my last question, abstraction of technology is the way to go? Or do you think that we should still educate people on how to use and what is blockchain and what is token and things like that? What's your take? Because I see, especially for example, on your product, you have 2 different versions for people that are, familiar with on-chain functions and people that are not. So what's your take on that?
Yeah, that's definitely the way. I mean, but you can't convince people if you don't educate them. So there's also kind of like a transformation period. But I mean, just take a look at the internet, for example. I always compare kind of like the stage where we're in right now when we do say that this blockchain technology is kind of like the next evolutionary step of the internet. It's like 1999 compared to the commercialization of the internet. But now I'm using the internet every day, but I still can't really tell you from a technical point of view how it really works. I mean, the same will happen to the blockchain technology, but now we're in this kind of phase where you still have to kind of like explain it to people, but the farther we go, the more it moves into the background and the more mass adoption you will get, because you can't tell all of that stuff to the people on the street to convince them that they need to hold a seed phrase now, then they will never touch that stuff again. Yeah.
True. I mean, there was a very good point, like said this morning on custody. So you're all for like custodian agents, keeping people's money, right?
Yep, that's how the world works.
Oh. What's your take?
Totally agree. So I think after this education period, it's complete in the back end. People will use the use cases, and if in the back end, if there's for them a traditional fiat transfer or a stablecoin transfer or Unity, for example, the end user will not realize. Or if it's a money market from you, tokenized or traditional one, it doesn't matter. They're going to profit from easy access, from easy transferability, from all the added use cases on top and cheaper products, but we're completely in the back end and UX will take over.
Yes, I agree. I think this industry only scales with abstraction, and this will be the good test of whether this is a good technology or not.
Yeah.
Because the only way for the technology to be adopted is for the UX, the product experience, to be better with a complete abstraction of the blockchain complexity, which for most people doesn't make sense.
Yeah.
So if abstraction doesn't work, it means that there is actually an issue with this technology.
Definitely. We have a few minutes for questions, if there's any in the assembly. Yes?
I have a question regarding privacy. You're offering tokenized products. Blockchains are public. Maybe I don't buying millions of dollars of money market funds, and I don't want people knowing about that. How are you guys looking at privacy in that context?
I can take it. I think it's an excellent point. For now, to be honest, it is not too much of an issue for our customers. Actually, it's quite the opposite. They value the fact that the fund operations, for instance, are auditable. You can look at the investor concentration in real time. You can see the subscriptions, redemptions every day on a daily basis. And everything is anonymous because obviously we don't disclose the identity of the wallet holders. That said, I think for a lot of use cases and for this to scale in capital markets overall, we will 100% need some privacy. And probably we end up in a situation where you have the important data that is still visible. Like fund concentration, for instance, is a data that is super important. Everyone, when considering subscribing in a fund, at least with a bit of sophistication, is interested in looking at this. So this is actually a data that you want to be public and to be disclosed. And the blockchain technology is really good for that. But indeed, as you said, most likely, if you transfer money market fund shares, to fund a collateral position on a trading venue, you don't want this to be visible by all market participants for legitimate reasons. And I'm also quite confident that we will get there from a technology standpoint. These privacy solutions are being developed. They already exist in production to some extent. So when times come, when this makes sense for the customers, we will adopt them.
Yeah, same with us. So currently it's not an issue for our clients. They're thinking about and talking about, they're discussing this issue for the future. But right now it's the pseudo-anonymous. Of course, we onboard the customers, we know it, but from outside you don't know which wallet belongs to whom. And short-term solutions are sometimes that you do, that you have for each product a different wallet. So it's not that easy to sort out what belongs to who. So you can do it now already a little bit more sophisticated, that it's not that easy to see who is behind. But right now I think the advantages are more important, that it's audible, it's trackable, it's more transparency. It's also good for the regulator, it's good for all market participants, that you have more trust in the system. But at some point we have to deal with it in the future.
We have time for one quick question. Yes?
In a world where everything goes more digital, how do you build trust and ensure that in the end, at the very end, we still have kind of like the physical asset in place, and therefore the trust for all the people who wants to see that the collateral is there?
I can start. So I think if you look at, for example, 2008, the crisis, I think what a big problem is that you had packages and repackages, that you had the asset here somehow, and then you had repackages and then loaned and repackaged and structured product, and nobody really could go down the line. Nobody could really go down the line and see the impacts. If you have everything on chain, you can really go down and track it to the actual asset. So that's first of all a major benefit, that you have a ledger where you can really see the dependencies of each product on chain, and you have then AIs or analysis over it who are done way better in predicting what happens if something in this chain happens than in the current situation where you have so many manual processes and it's just impossible, even for the regulator impossible. So that's first of all a very the big advantage from my side. But of course, at the end, is there still a house, and what's the quality of the real estate down? Is the same as it is now. Yeah, if there's a flood coming and the real estate is damaged and so on, then you have it's not everything is digital at the end. The house is physical, but you have a lot of more transparency as everything is on chain, and you can really see how it's packaged and repackaged and loaned as a major advantage.
But I think one point to you, in a more digital world, you also need a digital bearer asset, which you can track it.
Yeah.
But the digital bearer asset, we already have that. It's Bitcoin, basically. And that's why you can also see that JP Morgan is accepting it as collateral. The US is setting up a strategic Bitcoin reserve. These are not just marketing things, I think. This is kind of like, could be a new neutral reserve bearer asset for the future where everything is moving on chain, because this is kind of like native to the new future of the capital markets that we are hoping for.
What a perfect conclusion. Thanks a lot, guys. A round of applause for the panelists.